I'm your host, Neeraj Shah. Our guest today is Prateek Agrawal. Needs no introduction. Prateek, great having you. Thanks for taking the time out.
No, great to be here.
Thank
Thank
you.
you for having me.
No, the pleasure is ours. Prateek, seldom are all-time highs accompanied by good valuations. Just trying to understand for all your businesses, which is broking, wealth, as the case may be, are you guys being cautious at the current levels, or do you believe there is more steam left?
No, so some of the businesses are autopilot businesses. Uh, so there, for example, broking, etc., at a high in the market, the activity should be expected to be higher. On the AMC side, definitely, we are seeing a performance revival, and that is, let me say, the street is getting confidence back at us, and we are starting to see some amount of inflows.
No, but what I meant was that are you guys comfortable to put in more money to work at the current valuations of the markets, Prateek? Because while everybody talks about the large cap valuations at the small cap end, we saw a couple of funds even stopping inflows into the schemes currently, maybe citing valuations worries again. What is your sense?
Yeah. No, so if we segment the market into larger cap, mid, and small, the large cap index is just a few percentage points higher than the last peak. And the time spent in between the two peaks has been 8-9 months. So, corrected for compounding of earnings, the large cap index is actually 6-7% lower versus the last peak in terms of valuations. The mid cap index is higher by close to double digit kind of a number, and hence the valuation comfort there is there but lower. Small cap index again, in terms of valuation comfort, is similar to where we were last time. Maybe valuations are a tad lower. So on valuations, we don't have an issue. And second, if we are looking at the mid cap space, all the themes that we are talking of today, be it China plus one, benefiting chemicals, benefiting EMS companies, etc., be it hospitals in the healthcare space, whichever theme, defense, etc., most of the names that we want to talk about, build in the portfolios lie in the mid cap space. So yes, while the valuation comfort versus other spaces is a tad lower, I think this is the space to continue to focus on. We have said this, that one should expect a period of consolidation in the market, but focus should remain on the space where growth will sustain for longer. And most of them lie in the mid cap space. So, next peak of the market, one should expect the mid cap performance to be better than the other two spaces, like it has been over the last 1 year.
If you were running your own portfolio currently, Prateek, would you believe that it would be peppered in a big way, in an overwhelming way towards the mid cap end of the market?
Yeah, overwhelming way towards the mid cap part of the market, yes.
Okay, great. And I'll talk about that in a bit. Now, I just want to do the here and the now a bit. We are starting the earnings season, Q1 earnings season this week. Technically, Thursday is the first reactions, but we have the IT majors starting off. What's the sense, Prateek? The previews seem to discount everything, and previews seem to indicate that a lot of things will not be hunky-dory on the delivery front. Is that priced in, or do you think that it is still a very fluid situation for large cap IT?
No, so there is a good chance that the street is positively surprised from the numbers. While, personally speaking, even I am not positive on the space, because, they have fingers in all the pies, and in a flowing world, one space or the other will throw up some negative surprises. Now, the point is that over the past 3 months, the negative news flow has been so high, and so many documents have been prepared saying this will go bad and that will go bad, that for things to be worse than that would be difficult, and hence there may be a relief kind of a stuff when the number comes in versus opposite is my sense. And two, there are some technical factors that one of the IT companies may actually delivers a growth kind of a number versus generally speaking flat to degrowth expectation from the pack. That I think in the scheme of things people may have overlooked. So overall, I think there is a decent chance you get positively surprised on the larger cap part of the market. As far as the mid goes, I think companies which are focused onto auto tech, onto travel tourism kind of verticals, seeing some tailwinds because they have crossed a size threshold, etc. I think should very much continue to deliver numbers as they have been guiding. And if they do so, the stock price reaction should not be violent either ways. Over a period of 2 to 3 days, one should always say.
Okay. Prateek, having gone through the previews that have come in from multiple houses, including the Motilal Oswal preview as well, gets a sense that if there is a room for positive surprise, if you will, because I don't see overwhelming bullishness on earnings delivery on most pockets, maybe save autos, to an extent the oil and gas pockets selectively. Those are a couple of pockets that stood out. I mean, are you sanguine on the prospects? And if so, where is it that you personally believe earnings delivery for Q1 as well as maybe for FY24 could be constructive?
So this is a period wherein people are building in some amount of margin increase. Now, margin increase is almost never linear. If the operating conditions are good, more than expected margin increase can happen, and vice versa. So I think that's one space where one could see some amount of positive surprise. Now, just look at how the discourse has moved over the quarter. Beginning of the quarter, people were a tad worried on the growth on the consumption side. The first month people thought was weak, and then as we moved forward over the quarter, strength in various pockets started to be seen. Some pockets continued to be weak, but I would say most of the durable luxury kind of pockets started to see strength. So let's see how the numbers come out. But I would believe on the margins, there is a room for a positive surprise.
Okay. Any specific pockets where you believe the delivery could be much stronger than anticipated, Prateek?
So, like I said, first month was a slower month. Last 2 months have been a tad stronger. I would say in part coinciding with also, currency exchange that got enforced. People may have just gone out, spent, put money in the bank. So, you are seeing liquidity move up in the banking system as well. So I would say durables, there they have the commodity tailwinds as well. Maybe luxury consumption are spaces where there could be positive surprises. Maybe even FMCG, where there is this premiumness theme that works. One should expect to see people ending up with slightly better than expected spends on the premium categories versus otherwise.
Okay. The other aspect, Prateek, and it's got to do a lot with Indian culture. And I was talking about it on Thursday or Friday when Titan came out with such a strong quarterly update that while we've had a very strong Q1, Q2, the Adhik Mas, Q3, the Pitru Paksh and some of these settling in means that the number of and the wedding and the auspicious season, wedding festive season being pushed ahead, we might have a lull of 3 or 4 months for everything connected to auspicious buying. Now it could be cars, it could be jewelry, it could be real estate. Is that a current and present danger?
So the thing is, it happens every year, and hence in many industries, one should see numbers on a YOY basis. This is what causes cyclicity over the year. So nothing exceptional will happen this year that has not happened in the past.
Got it. Got it. Okay. Prateek, the last couple of questions. One is on the changing dynamics in autos, and I would love to understand how you think about it. And it's a very wide bucket. But if Royal Enfield versus Bajaj and Hero is a case in point, there is also this whole conversation around battery manufacturing and what could happen in that bucket. There's also this whole note that has come around free cash flow for Tata Motors. So a lot of companies are very individual, idiosyncratic reasons, but combined in the auto space, there is a lot of chatter. What has stood out for you the most in autos? What is it that you're looking forth the most when it comes to this very wide bucket?
Yeah, so this is a period wherein what you did in the past continues. So that is ICE engines, vehicles on ICE engines, and what you will do in future is just about starting. And in that sense, it is becoming a sum of part kind of valuation game, that ICE business should be valued at so and so, and the EV business, should be valued extra, and so on. The point is, after 10 years, maybe one of the two businesses will be there, the other won't be there. So, if you see the enthusiasm towards EV, and people want to buy it, maybe because of charging infrastructure, time of charging, they're delaying purchase, but they want to go the EV way. So the point is, it is not sum of part. It is one value which will slowly move down to practically nothing over a period of time, and the other which will rise. And hence, if you are looking at a auto company which did spectacularly well in the ICE world, to believe that that company will deliver a net addition to value in the EV world is very difficult. At best, it will be a substitution effect. So if you take market cap, 100 rupees of market cap in ICE world, in the EV world, that company max would be 100 rupees of value. The play hence then becomes companies which may have good capability, but could not make a large impression in the ICE space. And as every disruption does, gives them a new opportunity in the EV space. So that is the space to really focus on. And of course, every disruption will get in some newer players as well. So if one believes, if one is convinced about the general direction of the flow, which space the disruption will ultimately favor, I think this is the construct to look at. I would want to really, if at all, look at this space, look at names which have a very good engineering capability, but for some reason could not make as big an impact on the ICE platform, and EV gives them a brand new chance of doing it. Now, there are vehicles which people loved in the ICE space. Okay. Now, in the EV space, as you transition, how does that value proposition hold is something that I really struggle with. Especially in the two-wheeler space. The EV things will go faster, will be more economical. Does the youth want to look like it is not in favor of the planet? I really don't get it. So I think this move from in the two-wheeler space will be the fastest. And people who are thinking that their platforms will be the last impacted and all of that may have a very niche market. It won't be a growing market to my mind. And hence to keep according a high multiple to that business is something that I am unable to do.
Interesting. If I read between the lines, the impact on the last week's impact on a particular player might not be the end of it. It's gotten impacted in the ICE segment as yet. The EV impact might still to be watched out for.
Yeah, I mean, every player is a capable player. They have a lot of money in the bank. They have to think through these strategies and so on, and share these strategies with investors, because otherwise saying we are preparing doesn't help. We need to see how it makes sense.
Yeah, completely get it. Okay, our last couple of questions, Prateek. One is on this ongoing real estate cycle. Now, the numbers have a high base, so on and so forth, but the recent launches that have happened, even from smaller companies in Noida, for example, have had a really strong uptake. I mean, pre-sales are getting sold off like there is no tomorrow. So is there much to the disbelief of certain skeptics? Are you of the opinion that the cycle continues unabated and therefore it's wrong to balk at how long can this cycle last?
No, so real estate cycle has a lot of strength. We are clued on there. There is some amount of pent up which is there, and people who are less positive because interest rates today are higher than they were in the past. Point is, now everything is variable interest rates, and at a point interest rate hence doesn't matter. You may have bought something when it was lower, now you have to pay more. If you bought today when it is higher, tomorrow you may have to pay less. So, and I think companies are going out of the way to even smoothen that for the buyers. So the thing is, if India grows strongly, and it has been doing quite well, newer industries are coming up, newer locations are popping up. So people would need housing in those spaces as people get called back to work in the IT space. Again, in certain geographies, we are seeing very good housing demand. So I think this is something which is sustainable. More expensive locations also, like Bombay, are seeing good demand. So cheaper locations where you see newer businesses move are really seeing very good demand.
Got it. And thereby my final question, therefore, we did an interview with a real estate ancillary or an infra ancillary, if you will, last week. The demand cues are extremely positive there. So much as you seem positive on real estate, on the ancillaries, is the optimism there, or are valuations a bit of a hindrance?
No, so in terms of investing, we have very little exposure as a house to real estate. We are more exposed to real estate ancillaries. So cement is something that we have some exposure to. But what happens is when a house gets built, pipes get fitted. So we have some pipe companies, cement companies. A house is the biggest expense. So ancillaries in many cases are, to our mind, a better way of playing this space rather than buying builders themselves.
Got it. Okay. Prateek, always a pleasure talking to you and getting a nugget or two of wisdom, maybe more this time. Thank you so much for sharing the time today.
Thank you so much.
The pleasure was ours. Viewers, thanks for tuning into this edition of The Talking Point.